Bitcoin's now done 3 days up from the low of $108,000. That's where we saw the sentiment drop into fear for the first time since April tariff crash low. And we're just 8.4% away from a new all-time high price. Now, I've got a few things to cover in today's video, especially signs and indicators looking at the dot-com boom. The AI sector is obviously driving the interest in the stock market, but we may see some of this flow-on effect into Bitcoin. So I've got some pricing to get through in today's video for BTC. This is some price forecasts. Also looking at the S&P 500, some historical values there regarding the dot-com boom and bust, and then how this all flows on to Bitcoin for this cycle before we see the penultimate end to the 18-year cycle. So if you haven't already, hit the like button, subscribe to the channel. Links in the video description for our report coming out today, looking at the economy, Bitcoin, and the real estate cycle, which is also due to peak sometime in 2026. So I'll start off with Bitcoin and then bring all this together. Also looking at the metals, as we've seen silver take off to fresh highs, gold, new all-time high prices as well. First things first, Bitcoin is now trading at $114,500. Now, the 3 days that I'm looking at here are from the $108,000 low, and these days have all had higher highs and so far higher lows. We're currently 21 hours away from the end of the current day, being Tuesday the 30th, which is also the last day of September, meaning we're going to see a monthly close in less than 24 hours time. So here is the monthly chart. That's the green bar right here. And as we've been discussing on the channel now, obviously since September, but also for Q3, as we looked at the forward returns and the indicator cycles for Bitcoin through this period, is that we was expecting some sort of grind for Q3. So if we take a look at the 3 months themselves, there is July that hit a new all-time high price. There is August that also hit a new all-time high price, but reversed most of those gains. And now we find ourselves in September, which went marginally lower than August, so a slight down month. But potentially in 21 hours time, we'll find out whether this is going to be a green close or a red close. Either way, it seems like it's going to be a marginal close, which is what we were anticipating with these numbers. So this is the TIA forward returns, just looking at the quarterly charts here for BTC. And the quarterly charts so far, July to September, roughly around that 5% mark, which from historical values, we can see that Q3 is one of the weaker months, weaker quarters. Q1 and Q3 are typically the weakest quarters. Q2, which we saw a very strong move this year, 30% up for Bitcoin, was a good quarter. So 3 times out of 4, it's typically a good quarter. And then Q4, 2 times out of 3, so almost dead on, 2/3 of the time is a good quarter. So we're about to head into what typically is a good quarter. And when we take a look at Bitcoin on our predictive cycles, you guys should be pretty aware of this. If you're using it, this is how I'm showing you to put it together, clear the chart, and then we're going to look at the 5 and the 10-year composite cycle combined. We can see that we moved into a pullback. We zoom in here. That movement there is basically what has happened to Bitcoin thus far. What we want to see to confirm this move to the upside is now breaking past those tops. This one in particular, that was the August 22 top and the top on September 18th. So if we take a closer look at those numbers, those days were essentially the FOMC meeting. So that's pretty much been the most important time over the last month and a half for Bitcoin and the price. There it is there, August 22, 117,400. And again, 2 times you had the test here when the interest rates were cut. So basically sold the news, ran back up, tested the price again, almost dead on 118,000, and then sold off again. So since that news, the 118,000 has been the key resistance level. That's why I've got here, it's basically the J Powell top at 118. And as we approach that level again, we've also got the 7-year resistance line that's still in play. And should it happen today, that price is about 118,040 bucks. Tomorrow, it's going to be slightly more than that, a couple of bucks more. And it's just trending up ever so slightly day by day because, of course, it's a long-term resistance level. The outlook on the channel, or the outlook that I've had here, the theory, is that September was going to be down and then a green month based on what we had seen with the cycle analysis and also the forward returns, in particular, the outlook from July, August, and September. So what happens when July is green and August is red? This is what we've been posting about on the channel and also discussing in detail with the reports, basically coming out 3 times a week with your economic report on Tuesdays. Wednesdays is Altcoin report, and then Thursdays is the Bitcoin report. July green, August red. Generally, you'll see a green September, but that's almost contrary to popular belief because most people expect September to be red. So I don't think it's not to be confused with the red Septembers that you typically see in the stock market. It doesn't have to be exactly the same on Bitcoin, and potentially, we'll find out in 21 hours, that might not be the case. September might not be red. But either way, it's marginal. You know, it's nothing extraordinary. The main thing, the main point we're watching for quarter 3 for in advance was that it was going to be a consolidating period. We saw the spikes, and then this period has to consolidate if we're going to see that strong end to the year. If we're going to see a quarter 4 move that we're anticipating based on the cycle theory here, looking at the 5 and the 10 year, not the 4 years, not the 4-year halving cycle, not the 4-year low to low cycle, none of that sort of thing. We're looking at the 5 and the 10 year based on Gann theory, which goes back over 120 years of data across all market types. So it's not focused solely on Bitcoin, and I prefer not to just have indicators that only work for one market because they're not tested for a long enough historical period, and B, you can't use them anywhere else. So I think it's not necessarily pointless, but almost to a degree. October, we're running up here. That's the idea anyway. Okay, so that's the long and the short of where the current move is. And if this is one of your first videos that you're tuning in for, the levels to the upside we're watching for confirmation of the breakout is above $118,000 and then above 120, as we talked about in yesterday's video, which I'll leave a link to at the end of this video if you want to catch up on that. This will trigger a new all-time high price, and they were several of the reasons that you can use for Bitcoin to get to that new all-time high price. And as I said, I'll go into detail with new all-time high prices and cycle ending prices, potential, of course. No one has the answers to that, but prices that I'm looking out for this cycle, should other indicators come together that start to suggest the momentum is slowing down, the sentiment might be getting out of control, and then we put those together to give us a good ending to the cycle price. What are some more of the similarities that I'm seeing for the 1990s dot-com boom similar to what we're seeing right now? Well, first is we saw a pretty significant breakout of the resistance line stemming back from the 80s, the early 90s, and then it started to break out in 1995. So essentially a 30-year repeat at this point. You can see that we've got the top of the previous cycle. You can see through here as well, basically just drawing a nice simple line across these levels. And we've got a breakout on a logarithmic chart. So this is the 1987 top, the crash, then it got into the 1990s. That's before the recession. And then it bounced out of that level and started to climb higher, pretty much a slow grind into 1994. The correction was almost the same as what we saw this year, so 31 years ago into this April low, and I'll look at that in terms of dates. So the idea here is, the first thing anyway, is the breakout of the logarithmic move. 2007, 2021, 22, another hit in late 24, late 24, early 25, and of course it seems like now the market is really attempting to break out of this logarithmic resistance, which in my books is pretty significant, because when you can break out of those logarithmic moves, then it opens up the skies to much, much higher prices. Now, of course, things will have to come down eventually, and you can get some pretty severe moves to the downside. When this ends, we're looking somewhere after the peak of the US real estate and economic cycle, which, as we've been pointing out now for years on the channel, is coming up to that relatively soon. Could be the end of this year, could be sometime in 2026. Remember, these are very long cycles, looking at roughly 18 years in total. Therefore, it's about 14 years up. And we'll start to see some more of those signs of the cycle peaking, more than what we have covered on the channel already, with things like the home builders ETF potentially peaking already, which is an early warning sign to this being over or peaking and then correcting, of course. But the stock markets typically continue to grind higher. And through that period, what we saw in the 2008 crash into the move higher is we saw things like metals start to move higher as well. And through that period, we did see the S&P 500 versus silver in this case, and we can also look at it against gold. They start to go on a bear market. So the S&P 500 through that entire period was in a bear market versus silver in this case. And you can see here from 2018, the S&P 500 has basically been hitting its head on 200, 205 versus silver. So one S&P 500 contract would buy you about 200 ounces of silver. Now, with the price falling, or with the chart here falling, one S&P 500 contract only buys you 141 ounces of silver. So quite a big difference there, especially if you look at a percentage from the high to the low. So it's down about 37%. And this is what we talk about with members, and what I try to explain on the channel here as well, is we need to start looking for assets to rotate into after these peaks of particular cycles. So if that's of interest to you, check out the Discord, check out TIA Premium. There are links to that in the video description. Looking at the current price action and what it looks like compared to 30 years ago, we can see that it was a pretty good year to the upside. So essentially, in a nutshell, it's not just going to be an easy ride straight to the top, and that's pretty much the main thing I want to point out here. You can see some of these corrections were double digits. This is for the S&P 500 now. Tops to lows here on a weekly chart, double digit in 1996, another double digit in early 1997, roughly around that Q1 period again. You can see this April low like we saw in 2025, another double digit here of about 13%. And as you start to get closer to the top, these moves become more and more volatile. That is a 22% move for the S&P 500, which institutes a bear market. So that would be a bear market would be triggered on a 20% decline from the highest price to the lowest price. Often they look at the closing, but looking at this in terms of 20% moves to the downside, that's the volatility of that move, pretty severe. The market kept climbing from that point, and then of course it topped out, and the 2-year bear market started from 2000, load in 2002, and then of course we saw that final leg up. So in a nutshell, the main thing I wanted to mention here is that although it looks like it can be a nice easy move to the upside, we know that nothing is that simple, and especially as we're leading into the highs, I think, and I've mentioned it many times before, trying to pick the tops is probably one of the most difficult things that we can do, because as it leads into the high, the volatility gets more and more extreme. You can see a lot of these moves are quite big, double digits, almost every year. You had one in 1996, one in 1997, another one in late 97, 20% in 1998, and then 1999, you had this move here of 13%. So you had multiple double digits in consecutive years. Every less than 12 months, a double-digit move to the downside. So we've got to try and hang on for this next move. And should we see bigger corrections, takeouts of swing lows on macro charts, that would be another signal for us to say that, well, it's probably time that this is over, and I'm not going to be able to call the exact top, but I'll be watching for signs of the price and time over balancing. Another thing that we teach and go into detail in with TIA Premium. Now, on top of that, there's a couple of other signals with the streak for the S&P 500, which I think is also going to help out this move for Bitcoin. I don't think Bitcoin is going to run as long as the S&P 500. Happy to be corrected. And of course, if you're on board, then you just got to keep running with the trend. In terms of the S&P, signals of strength and stability, this RSI streak has rarely preceded a major decline. So when you see this signal, it typically means there's going to be further upside. And essentially the signal is number of consecutive trading sessions with the RSI above 43. It's at 110. So when the S&P 500's RSI has persisted above 43 for at least 110 consecutive trading sessions, the historical performance has been consistently positive. Here are all the streaks. And the other reason why I was bringing this up with or comparing it to the 1990s is you can see here in 1995, a number of those signals continued to pop up. You got May, June, July, August, September, and then you also saw it around the peak or a year out from the top. We know it topped in 2000, March 2000. That was for the stock markets, coming into that dot-com boom. If you believe we're in an AI boom and things are similar, well, then we got to watch out as well for that 12 months out, March, April, May from the top. So 12 months later, they all had very, very positive returns there, double digits, 28% from this signal. 12 months later, 20%, 20%, 11%, 20%, so on and so forth. The readings, mean, median, positive. Okay, we're looking at positive return of 83% of the time. There was a higher price on the S&P 500 12 months later after the signal. Therefore, I think there is still some left in the tank for Bitcoin as well. Now, these are just some of the side pieces of data and analysis that I like to look at and note how they also correspond to what we're seeing in regards to the cycle and our price and time analysis. So we're also seeing it with the RSI, looking at the total data combined, not just the line on the chart, but looking at the data itself. The mean and the median, from 83% of the time, you're going to get roughly 10 to 11% return. Now, average max loss, 4%, average max gain. So remember, this is an average of the maximums there as well. Obviously, there will be 1, 2s, 3s, 4% losses, and of course, the double digits that I showed as well. And this is looking at a different signal. But that in itself, you still have some volatility on the way to the upside. Now, that leads us over to silver and a look at how this also leads into that peak. You can see the S&P 500 rising up here into that top of 2000, and it was outpacing silver at the time. But remember, it wasn't the end of the cycle like we're at now. That was basically running into the mid-cycle. What am I talking about? I'm talking about the 18-year cycle. There is the midpoint, roughly 2019, 2020. We had the correction, and now we've run up into the top. And this chart here, there is 2018. So basically in the midpoint there, silver has started to take the gains, and similar to last time, there is the midpoint of the cycle. So it was around that 2000, 2001. You had the low in 22 and then the top in 2005 through to 2007. And you can see through here, silver was basically taking all of the gains, well, more of the gains than what the S&P 500 was taking. And that's all this chart is looking at. Where is your money best placed? So then we take a look at silver and gold. You've got the silver and gold ratio. You can see gold and silver here is, well, the comparison. Gold was if it's on the rise, that means it's outpacing silver's returns. If it's falling, this chart is falling, that means silver is stronger than gold. And then we can step it up another level and look at things like Bitcoin versus silver. So I've shown this on the channel a few times as well. You can see these highs forming, they're getting lower, and this has now started to drop off a cliff. We're on the verge of breaking the low here at 2,340 ounces. Let's throw a few lines on here. If this chart goes down, silver is stronger than Bitcoin. If this chart goes up, Bitcoin is stronger than silver. And at the moment, we've got lower highs and marginally lower lows. We do have a higher close here for September, so that could be enough to hold things out and then watch for another rise. So another big one that I'm watching here is for a move back towards 2,900 an ounce and also 2,650 an ounce to see if it can test those levels for the next move. And we can also look at Bitcoin versus gold. Probably one we don't want to show Peter Schiff too much about because it's actually starting to converge here. So for the Bitcoin holders, ideally we start to get a breakout to the upside for Bitcoin versus gold. And that could be a possibility because we have seen gold really take off at the moment. So it'd have to correct at some point, but we're not trying to pick the tops and bottoms for those things. Leave those up to the amateurs who are trying to short gold on the way up and all those sorts of things. What we're interested in is what is going to be a stronger asset longer term. At the moment, this is converging. So we need to find out, we need to wait to see what happens later. Do we start to see a test up and then a breakdown? To the downside, gold is better than Bitcoin for that period, of course. And to the upside, Bitcoin is stronger than gold. And of course, over its history, Bitcoin has definitely been stronger than gold. But as of late, over the last many years, Bitcoin really has struggled to break past anywhere around 35 to 36 ounces. So 1 Bitcoin to buy 36 ounces has typically been where the top has been for the last 5 years. Here is March 21, here is April 21, here is October and November 21, and it hasn't been able to break through that level. So these are really important charts moving forward for our portfolios, as are things like Bitcoin versus the NASDAQ or Bitcoin versus the S&P 500. I think these are really going to come into play as we get towards the peak of the cycle, but I don't think we are there yet. Some good signs are, of course, the USDT dominance. We saw the move higher, and again, if this chart goes up, that's bearish for Bitcoin and cryptocurrencies. If this chart goes down, it's bullish for Bitcoin and cryptocurrencies. We saw it rise the other day to hit dead on our 50% level at 4.75%. That's the halfway point for the entire bull market. It's an all-time high to basically the cycle low, and that has been basically been rejected from now, and it's closed back underneath the 2 previous tops, which is a sign that the movement higher for the USDT dominance is slowing. Doesn't mean that that is the top, or the top for this move. It is a top, but this thing could still test higher prices and then trickle down. And the difference with that is that you're seeing smaller moves to the upside. So we don't have huge moves to take out those highs, and you're starting to see the weakness in the USDT dominance as it closes back below those highs. So another positive sign for Bitcoin and cryptocurrencies for this stage of the bull market. If this is to break down, that's where we're basically looking for huge moves in the market, all the bull, hopium, everything you could ever wish for. And to me, it seems like a lot of this gain is going to go to Bitcoin, Ethereum, and potentially some of the other majors that have ETF filings and ETF things like maybe Solana or potentially XRP. You can see BlackRock is also filing for a Bitcoin premium income ETF, expanding crypto offerings. They, of course, have billions and billions of dollars in assets under management in these ETFs, and of course, trillions overall, I believe. Nonetheless, here it is, $61 billion in assets just for that Bitcoin ETF. This particular Bitcoin ETF won't give you the same sort of upside that you would get holding Bitcoin 1-for-1, of course, but the idea is that it would generate returns by selling covered call options. So essentially, you want to take some sort of yield. You'll be getting a return on a regular basis instead of those gains to the upside. So basically, instead of just selling out bits of your Bitcoin on the way up, this ETF is designed to trickle some of those gains back into your portfolio and essentially reduce the volatility of the price movement of BTC. So horses for courses. And horses we'll continue to talk about. And these horses are looking at the weaker horses, but we want the stronger horses in the race. Others chart shows everything excluding the top 10, which is of course Bitcoin, ETH, stable coins, and the other majors there, XRP, Solana, and so on. And this chart is basically all of your shit coins. It has continued to head down towards 7.7%. That was the support level. Ideally, it finds a base relatively soon, spikes and comes back up, is an okay option as well, and then starts to climb higher. This chart really does need to get above 9% for there to be any sort of fireworks in the altcoin space. And really, it's a number above 10%. So I've got the overbalance in time and price at 10.5. We've got the 50% levels at 9.6 to 9.8. So at a rough number there, call it 10%. So we need to see more than 10% dominance in the others chart for there to be huge fireworks in altcoins. Otherwise, it's going to be another fizzler. And it's happened throughout this entire cycle. You've got altcoin specialists and influencers and X accounts and all that sort of stuff continuing to talk about altcoin season. Meanwhile, there's been no season. The season has basically been down. So you could call it an altcoin season. It's an altcoin season of further downside, more and more lower prices here. It doesn't mean that it's over and it's never going to happen. It's just be careful with the timing of when you're getting into these things. At the moment, you've got the total crypto market cap minus Bitcoin and ETH. Of course, it includes stablecoins, so it is helping that prop it up. It includes Solana, XRP, because this is just minus these two. This chart is still looking relatively healthy. We're still seeing consolidation above $1 trillion. And while it's still above 950 billion, which is this yellow box through the middle here, then I think there is further potential to see the total 3 chart break higher. So this one includes that top 10. There's a lot more strength in that top 10. Yes, it includes a lot of stable coins on this chart. And this is stronger than looking at the others chart, which doesn't include those top 10. So it seems like all this sort of news around ETFs and more of the ETFs coming for ETH and for Solana and XRP are some of the main reasons why the total 3 chart continues to climb higher, whereas others continues to fall. They're just not seeing the same sort of sticking power as what those top 10 are seeing in this particular cycle. Now you can see the strength in the stronger altcoins, things like Ethereum. We've seen the correction of 23% now. So that has met the correction that we were watching for between that 20 and 30%. Is there going to be further downside? Potentially. If it breaks past 4 grand, then yes, I think there's going to be further downside again. However, if ETH is able to hold and consolidate between 4,000 and 4,300, then I think there's a much better chance that you're going to see a climb higher after Bitcoin starts its next move. It is in a slightly weak position for the short term compared to Bitcoin, and you can see that on the ETH BTC chart. It's still in this downtrend. It hasn't been able to recover against Bitcoin just yet. I think that'll change. I think ETH will outperform Bitcoin for some part of the rest of this cycle, but it hasn't turned that corner just yet. And you can see ETH at $4,200. If there is another spike lower, then that might be one of the final ones, as we've already seen 2 moves down on the weekly. You can see this first move, the second move, and now I'm probably targeting somewhere between 33 and 36 as a final low, if it in fact gets there, because for now, the $3,800 low is looking okay with this consolidation above 4. So that's if it stays above 4. As for Solana, that's also done relatively well. It's still holding above 210, and that was the level that we want to see, because that's the previous high back in March 24. So it's still holding out, tested that 50% level, bounced back up, still in a relatively good position, and XRP still holds the 50% after the test there at 260, 269, and is holding at 288. So also in a relatively good position, whereas Hype has broken down and at the moment looks like it wants to fall a little further here. It failed at the 50% on the daily chart. You can see here on this move up, dead on 50%, and then has done multiple days down and has broken some of those previous lows. So, and below the highs as well. So in a slightly weak position overall. There are some economic data coming out this week that the Fed is going to be looking at for the interest rate announcement or the next interest rate meeting in October. The first being the unemployment rate and the PCE, looking at the inflation data. It's still in a relatively quote unquote safe place. It's at full employment historical low levels, currently sitting at 4.3, and the 5% is basically that level where you start to see things get a little bit too one-sided to running into that recession sort of environment. We're not there yet, and we can also see that with the inflation, it is higher than the 2% target that the Fed's looking for, but 3% isn't going to break the bank just yet. These are the sort of things that I think will eventually come through the wash, if that's the saying, but for now, it's still okay. Eventually, I think the Fed will have to put their interest rates up. However, in the short term, it does look like they want to at least hold them and see what the market is going to do. So if the market, in terms of the S&P 500, Bitcoin, cryptos, and so on, if they're getting used to these current levels, then there is still room for them to move higher, even if the interest rate is not cut. So we'll cover this in detail when the info comes out this week, and we'll also get into more detail with the metals. Silver, less than 6% away from a new all-time high price, and of course gold hitting a new all-time high price yet again today. What does that mean for their forward returns and outlook for the future as well? I'll leave that for a future videos. This one has gone on long enough. Thanks again for your support. You know the deal. Like, subscribe, share it with a friend, and I'll see you guys back here at the next one. Cheers.